welcome. You're watching Closing Trades on ET Now. Today is a special day. 14th anniversary is what we are celebrating on ET Now since the start of the year. Perhaps it's going to be special because maybe we'll hit that all-time high level. We are right now 80 points away from that, but nonetheless above 18,800 for the first time this year. And of course, what is really supporting the sentiment today is the news that we got just in the last 10-15 minutes, which is the fact that Moody says that the talks have been favorable with the government so far, and they are hopeful of an upgrade. So we'll wait by to get more details on this, but at least it looks like that the talks are moving in the right direction. Whether it finally results in an upgrade coming in for the Indian sovereign rating upgrade or not is something we'll have to watch out for. But we're seeing a big reaction on the market at this point of time, above 18,800, and even the rupee for that instance has seen quite a bit of hardening. Today it's below the level of 82 now. Remember, just weeks ago it was trading very close to that 83 level. Now it's around 81.70, 81.80. So quite a bit of move on rupee as well. What's also doing well today in the trading session are the banking stocks. So most of the stocks are actually trading in the green when it comes to the banking index. In fact, all the constituents are in the green today, and most of the sectors too are up in the green. It's IT which is on the back foot, and that's been weighed heavy by TCS, which saw a bit of a deal termination of sorts with one of the insurance clients in the US, and that's putting pressure. And then Wipro, of course, went ex-buyback today, so there's a bit of a technical adjustment there. But not much to worry at all. 80 points away from life high.
Well, yeah, absolutely. Let's just keep our fingers crossed and hope for a little bit push from the heavies, and we should make it there. But TCS surely, like Anisha was saying, is not quite participating. That deal with Aegon Envy, which was actually a $2 billion deal and a 10-year deal, has now been scrapped after 5.5 years itself. There's of course Ashok Leyland as well. It's been on a tear from the word go after the management meet takeaways. They're saying that the industry is going to recover to growth come July to September of this calendar year. They're looking to offer alternative fuel options in the next 2 to 3 years as well. And brokerages have liked their commentary. In fact, Bank of America has now maintained a buy with a target price of 200 rupees per share on Ashok Leyland, already at 164 rupees in trade. There's also Bajaj Auto, the Nigerian currency drop, and that's surely impacting this stock as well, which has been a rank underperformer from the word go. But for the Nifty, and given that we're less than 100 points away now from that all-time high, futures already at 18,900. Let's welcome on board a full house today on Closing Trades. Naresh, hi, welcome. We don't see you in the studio as often. Maybe today is the day we could make it to that all-time high.
Hope so. If not today, next week we definitely hit a new high.
280 points.
Yeah, so we have just an hour to go, so let's hope so.
Miracles can happen in minutes. Kunal?
Well, I'll say we'll start off the next 15th year with a new high.
That's also a good way to put it. Interesting.
No, but birthday तो आज हो गया ना, नया साल आज चालू होता है
ऐसे technically कल है.
But it's Saturday. Oh, you're right.
Good answer. All right, Mr. Bansali ready? Can we connect with him? Okay. 80 points away, and I mean the ring of an all-time high is just going to be such a great ring. And imagine we're celebrating that on the day we turned 14 years. So 116 points up for the Nifty. We've got a very strong momentum, which is now visible in some of the banks. It's been a good comeback by some of the, some of the auto stocks. Frankly, the year so far actually belongs to autos. We underestimate that. It's not a large heavyweight sector, but the year so far belongs to autos.
Absolutely. So, apart from heavies, a lot of other stocks have done well. So that's the reason Nifty has not gone up. But if you look at autos, you can look at even FMCG has started picking up. So a lot of sectors, defense, etc. So there are multiple sectors which are doing well. But if you remove out the heavies, everything else looks interesting. So if you look at every other index has made a new all-time high. So it's just a formality for the Nifty to hit an all-time high. Because all the indices I was looking at, whether it is BSE small cap to BSE all cap to Nifty 500, mid cap, small cap, micro cap, all the indices have already hit a new all-time high. So we just need one of the
BSE small cap 52-week high, not a record high.
Yeah, the Nifty small cap 100 because it's a more, there is some bit of a difference out there because it's some stocks have fallen a lot more in that. But BSE small cap, which is the much wider index, has also hit a new all-time high.
Interesting, but Nikunj, what I think is leading to that rally in the last 10-15 minutes is the comment coming in wherein Indian officials are saying that talks with Moody's has gone stable and they're hopeful of an upgrade. How likely do you think that scenario can be?
I think the upgrade should have happened a long time ago because rating agencies are not realizing that countries like UK and some of the European countries which are in a dire state and which in a sense almost averted default, why should their ratings be higher than us? And you know, we've specifically for UK, look at what happened to UK a year ago. Look at what happened to Italy a year ago. Look at what is happening to some of the European countries. They are on the brink of survival. Now, how these rating agencies move, why these rating agencies move, I think there really has to be a different approach in terms of how the rating agencies would move. But my limited point is, even if rating agencies give you an upgrade, I don't think it's going to change anything dramatically, because in terms of an positioning, in terms of a opinion, in terms of an appeal, in terms of flows, I think India is right up there. We are big recipients of flows. FDI deals are going through, startup momentum continues. So irrespective of, money will move where there is growth. And now money is moving independently of what the rating agencies were. I mean, this was, if it was ETNO's first anniversary, we would have said, oh yeah, no, rating agencies, Aisha, they matter. You know, their opinion will really matter, will have an impact on our flows and what will happen to a trade deficit, fiscal deficit. This is India of 2023 and the ETNO's 14th birthday. A lot has changed in the last 14 years, and over-dependence on rating agency, I think, is not there. I mean, it's laughable what some of the rating agencies are doing in terms of. All right, Mr. Bansali is ready, and what a pleasure always to connect with him. Mr. Bansali, on behalf of every from ET Now, are you ready, sir? All right, I think he is not ready. You could see it on his frame. But we are what, 80 points away from an all-time high. 93 points is what Indian markets Nifty has done, and good old HDFC Bank. Kunal, HDFC Bank, Reliance, dono 1% ऊपर है.
Yes, I think today is a day where many large cap names are making a very good comeback. HUL I think has come back about 2,700. We have Reliance, which has made a very good comeback. So I think, if I'm not wrong, this is the 4th consecutive day for Reliance Industries. And the one of the biggest technical factor which we should be discussing also is the India VIX, which is now almost closing into a decade low for itself. So we are just about at, I think, 20 paisa away from that all-time low for India VIX on closing basis.
You know, Kunal, from all the market experts that, we've been chatting with today, and they're all making the point that every bull run brings with it new set of leaders. And you don't have to look at the Reliances and HDFC Twins, because that's not where leadership is. But the underlying strength in select FMCG names like ITC, what's happening in the defense, in the railways, in the entire larger cap goods space, that is a trend which you need to cash in on for the next 3 to 5 years. You've been tracking the likes of the defense, railway names, L&T, etc. Do you also feel the same? Well,
yeah, I do feel the same, Aisha. And I think it's a very good point that, with the start of every new bull market, it's led by a certain set of sectors. But in the midst of the bull market, or in the second phase of the bull market, second leg of the bull market, we generally see active participation. And I think we have actually started to see those signs coming back into the indices. So right from those traditional low beta defensive names, pharma, etc., from the high beta stocks, real estate, auto stocks, rate sensitives, etc. Many of the sectors are now coming in line and trying to show performance almost on a rotation basis. And I think that's the most healthiest sign, which indicates that this is a bull market which would not just make a new high for itself, but it would sustain and grow significantly from current levels. So I would be extremely optimistic. And in terms of sectors, I would believe that from current levels, the infra, the FMCG pack overall should continue to outperform.
Right. Just flagging out some of the other counters in two spaces which deserve mention today are defense and insurance. Defense, a lot of our market guests today have been betting big on, whether it was Mr. Atul Suri or Manish Shokhani. Both of them said defense is something which could be the next sector to watch out for. Mazagon Dock, Garden Reach, Cochin Shipyard, all of these stocks are trending higher. And in terms of the insurance space, HDFC Life, ICICI Pru, Star Health, all of these counters are also in the green. Nykaa, of course, is 5% higher because there was an analyst meet today and the takeaways have been quite positive. So we are seeing fresh buying on that counter. In fact, if we can, let's listen into the big bites coming in from all our market experts today. Manish Shokhani talked about how it could be an internet moment, the kind of transitions that we are seeing with respect to ChatGPT as well as artificial intelligence. How coming of Apple into in India could be a G or a Maruti moment. Let's listen into his take regarding various sectors.
Look at people outside, they're very enamored by the Indian consumer. Yeah. So you'll find all the consumption stocks, the discretionary stocks are all pricing in 10 years of growth. I think the pricing is wrong there. The thesis is correct. Eventually, we'll have a J curve. But before we get there, we need to lift that per capita income up, which we are stuck at whatever, $2,500 or whatever number. But before that is to happen, a lot of the jobs in manufacturing, the jobs in infrastructure, the build out of India has to occur. So if you were to kind of phase it, the next couple of years is really the period of infrastructure, capital goods, and defense, railways. All these companies are really going to benefit a lot. And I don't yet think the prices have captured that fully. As you continue, again, our old theme, the financials, are at the center of everything. So while the last few years they've all gone after the retail guys, I think this whole corporate banking, the PSU banking pack, if you take the top 3 or 4 banks after SBI, they're all in 30,000 crore type PPOPs, looking evident, which are large numbers. SBI will be north of maybe 1,25,000 crores. I don't know. I think you just interviewed the chairman. The numbers are going to be staggering coming here. HDFC itself will be probably close to 1 lakh crore PPOP. So the numbers that will start coming out are going to startle people and shock them. And therefore, things which...
It gives me a great pleasure now to bring on board Mr. Vallabh Bansali. Mr. Bansali, on behalf of everyone from ET Now, thank you for joining us. You've been a big supporter of the channel. You've always accommodated our interview request. And we're really grateful to that you've supported ET Now in its journey.
My best wishes and compliments for this amazing journey that you have achieved. Business space is not an easy space. You have marked and created a name for yourself, space for yourself, and I'm very happy to be joining you on this day.
Let's talk about the rate of change with you, but there's one thing which has not changed. So 14 years ago, Vallabh Bansali used to look the same, he still looks the same. What is the secret you're going to tell us today?
Change is a constant life. So...
No, I wish I could take out a 14-year-old picture.
The elixir is actually Vipassana. You know, the calm that Mr. Bansali you have on your face, we all envy that.
Well, do Vipassana, might help.
No, I must admit and
Vipassana 10 days.
I must acknowledge and I'm grateful to Mr. Bansali. He did introduce me to Vipassana, and it's a rare day that I missed the 10 minutes after the morning show, Anapan. So that is something I'm truly grateful to. It's a wonderful practice which is really helping me, and I'm sure it will help millions of people going forward.
Indeed, I think Vipassana will be very big. This is not our main discussion, but Vipassana is basically to see reality as it is. As the world becomes more scientific, this is going to become more and more accepted. So I feel pretty happy about the world. It doesn't matter how grim the situation looks, it is heading in the right direction. A lot of people are heading in the right direction. So I see good days ahead for the world.
India is enjoying a premium positioning like never before, both in terms of political stability, business appeal, ease of doing business, and also in terms of the earnings as well as flows. Do you think from a market standpoint, there is too much of good news, and when there is too much of good news, investors never get bargains?
So I would say that yes and no, that there are ways and ways at looking at countries. India is now a very significant country. Say, for example, why should US dollar be as strong as it has been? Now, it's not in their balance sheet. The balance sheet seems broken, etc. But there were a lot of things that were happening behind the country and behind the dollar, and continue to happen, that surprises the world of dollar's strength. I think something similar is happening in India, which many people are not able to grasp. That there aren't many countries, and I've spoken about that, so I won't repeat, where we have the 3 balance sheets all aligned, all healthy. That I call only solvency. But if I were to look at a country in a more structural, more complete manner, then I would also, what is the sovereignty of the country? Now, we know that we have not always been a very sovereign power, and how in the last 30 years we've been more assertive about it, and much last 25 years about it. But the sovereignty status of India today is unprecedented. The solvency status of India is unprecedented. 2 other areas that are emerging, and they, as I hope they will build out the way I expect. The third one is what I call confidence, self-confidence. People from around the world go to the US and they feel we will be able to thrive here. The average Indian's confidence that, oh, he or she can thrive here is growing, but still not where it should be. But it is coming out of centuries of loss of self-confidence that, oh, we can do. So we thought small. Today's youngsters are not thinking small. The country is not thinking small. When some of our ministers speak about what they're doing, so this self-confidence is poised to go up massively if, the current environment that we are in continues, is my expectation. So what you see in IPCA, IPL, or what you see in the sports arena, all that is rising confidence manifesting in so many areas. The last, of course, where we have seen a lot of work is productivity. So productivity in terms of at policy making level itself, what policies were aligned to productivity, which meant you had respect for the country, that you could make this country productive and not just be an arbitrator, not just be the body shop or an iron ore exporter. From there to think of value addition, and I walked that journey with Mr. Narayan Murthy at Infosys, that how to think of value addition. So I think that whole value addition confidence is going to come in this country. And the last is productivity. The productivity, policy making productivity has started to happen, that we're seeing great policy reforms because they could not be undertaken unless you believed in the country. So this belief in the country has led to policy making, but we need that productivity in policy implementation. We need that productivity in labor. We need that productivity in judiciary, everywhere else. That's when once that productivity engine all around fires, this country is going to be a very different country. So there are forces in the world, those who are taking 20, 30-year views, they are seeing very, very good hope on a very different balance sheet, which is not very visible to everyone. And that is part of the answer why India premium rating does not go down. We all know that market prices are not low, etc., earning multiples are not low, but I don't see them go down as long as this confidence and productivity graphs keep going up.
Mr. Bansali, just a coincidence that today's ET Now's 14th anniversary, we have you on the show, and Nifty is 50 points away from an all-time high. The ring of an all-time high, sir, is something which we always like. But 2 years from now, 3 years from now, when we will look at ET Now's 14th anniversary and probability of a new all-time high on the market, do you think that will just be a pit stop? This market has many, many more milestones to go.
We've seen that, Nikunj. I have seen it a little more than you. That how, when the market became 400 points, if you were excited about it, 600, you were excited. So the market has always created new milestones. If you just look at earnings that are adding up now, the solvency of the companies, Indian corporate sector outside the infrastructure today is debt-free. And the banks are coming up with these large profits. What is going to happen? All this money will go into production and all. So once you're going to have larger investments, profits will follow. And profits will follow with the multiples, prices will follow. So I have just no doubt, it is absolutely mathematical, inevitable that we are going to have, They may take 1 or 2 years more or less, etc. The world is a complex place. India is also a very complex country. So that besides, otherwise we are headed up and up.
How much importance would you pay to the political election cycle? Exactly a year from now, that in a sense would occupy the center stage. So what's looking good today, could it take a back seat because of pure political compulsions?
So as I said, that productivity of policy making has been the big change. And then policy implementation, we decided to do GST, we implemented GST, etc. So that is very, very vital. So at this point of time, while we are trying to raise productivity across segments, if we become slow on policy making, then I think we are in trouble. So I do not know about which political dispensation, but to me, what is critical is that not only the trajectory and the direction, but the trajectory of policy making changes is continuous. That is important. And so I've given the mathematics of it. If any of the factors changes, the product will change.
Have to ask you about this. You've been an observer of IT and tech from eons, right? And I don't mean to hint at your age, but you've been one of the first investors in Infosys and a very, very keen observer. Look what's happening out there, especially now with generative artificial intelligence and the whole world now moving towards that. What are you making of how Indian IT can capture this moment?
So these are shift changes that take place in technology from time to time, from times immemorial, from the fire, the wheel, to metals, etc., etc. And every time that shift happens, we are paralyzed or we are overexcited. Right? Either it's a South Sea bubble or a paralysis of the kind that we see in some sectors because of GPT. But the artificial intelligence has been at work in technology companies for a while. It has now just hit the public imagination. And therefore, every shift change in technology creates an opportunity for those who are integrators, who have to integrate the old with the new. And every time the shift changes happen, there are people who lag behind, like in the skills, just as you see in the labor market, that those who cannot upskill, they fall behind. So also in technology companies who are not poised to upskill quickly, they will probably lag behind. But those who can upskill, they will benefit from new technology. New technology always creates unimagined new applications. And new applications will mean the necessity for new integration of old and new, creation of new and business advantages and all. So we have seen this cycle play out. When we took Infosys public, that time it was still the mainframe world. The IPO talked about mainframe, and even while the IPO happened, soon the world moved to PC. There's a big shift. But the big shift has only meant that the company did well, that we had Y2K and we had the internet boom and Web 2 and Web 3 and so many technologies have come. So I think from a long-term point of view, well, yes, this is an aberration. The slowness in the market in the US, that was a major driver for the company rather than ChatGPT or artificial intelligence. So I think artificial intelligence, big companies will be fine.
You mean big Indian IT companies as well, sir?
Yes, absolutely.
Okay.
Particularly those who are technology service providers, they will soon find a way to use artificial intelligence to make it a part of their work process, and new products will get created at the front end. So typically we find finance, retail, these companies are very quick adopters of technology and they convert it into a business advantage. And for that business advantage, they are very happy coming to those who will deliver those solutions very quickly. And it'll be the same big companies, TCS, Infosys, etc.
Mr. Bhansali, just a corollary to that. Of course, the OG of startups was Infosys, but what about the startups that we are seeing right now? Because it's gone divergent moves. A few of them have gone kaput, but there are likes of Zomato, etc., which are doing quite well. What's your take on the new startups that you are seeing right now in the system?
Well, I'm not savvy about consumer space. So therefore, startups which have caught the imagination of people are more on the consumer space. But there are many other spaces where startups have happened, which are, more back office, technology at the back, which we can't see. There are emerging areas like in drones, in agriculture, etc., etc. So I think there are a lot of startups who may find funding a little slow, but who are doing well. India's startup ecosystem has not slowed down, which were consumer facing and where typically one phenomenon of buying the market was there. Funding for buying the market by spending high amounts, crazy amounts, that part is seeing the greatest slowdown. The rest is fine. And these are slowdowns that happen in all sectors. So it's a healthy slowdown for the startup culture also. But every day we see very interesting startups is still coming to market, is still trying to raise funds. So I see, which happens in all funding markets, we have a cyclical turn, and this is a cyclical turn. I see already private equity funds sitting on larger funds and their investors demanding, when will you put money to use? So I see that drought ending soon.
Mr. Bhansali, every time
the market follows a cycle, and you have always explained this to us. How do you think this market cycle, which in a sense started post the COVID adjustment, will be different from the previous cycles?
So these are like waves in a sea. We can't really distinguish between that, this is first wave, second wave, third wave, but the wave merges with, under the surface. So I think, yes, what you mentioned about COVID and, COVID overcorrection, etc., that's all correct. But I think the two big trends in the world, one was the Ukraine war related and the China related, the sanctions related business. And second was correcting the inflation threat. And therefore the US turning off the money tap was the biggest trend that is affecting all markets and all PE fund flows, etc., etc. And the post-China, post-Ukraine world where geopolitics is redefining the supply chains. So those are two very, very big factors that the world is dealing with. India has been caught in the crossfire. So far, we have landed on our feet with Russian oil and asserting our sovereignty. So I see those are the two more important factors than COVID and other, etc. As far as India is concerned, it has already established its value as a regulator, as being now we are ahead of the curve or all along the curve. We are not behind the curve in any manner now, whether from a growth point of view or inflation point of view. And Mr. Shaktikant Das, being nominated as the best governor in the world is a reflection of how India has navigated all these changes well. And that's the point for me. So the markets are pretty smart. There is, I don't see any area where the market is not, any area that the market should have looked at and has not. So market is pretty efficient just now.
Mr. Bansali, there seems to be this Apple moment in India. When Maruti came to India, auto sector got created. When GE came to India, the entire IT sector got created. Now Apple has come to India, manufacturing is moving to India. So do you think if somebody is looking at a mega trend for next 3 to 5 years, like we say, the big profit pool in India, while consumer and IT would be incrementally growing, banks are cyclical in nature, the real booster for the economy would come from, let's say, the manufacturing sector. What is small today could become giant?
So clearly, today's newspaper, Economic Times, talking about Foxconn looking at India seriously and making it a hub for electric vehicles, two-wheelers particularly. Now that is just echoing what you just said. That once the infrastructure is built, once the policy is clearer, the speed of money, for example, in this country now obviously is the highest anywhere in the world. So as these speeds build up, we were far behind in manufacturing to have ambition that we can be a global force without correcting all these things. So once the corridors open up, the road infrastructure is already becoming fantastic, and the now the whole push on Gati Shakti, the logistics cost. Once that 3 to 4% correction I expect to happen, is already partially happened to happen in next couple of years to go below 10%. I think we will have a right to ask for manufacturing, space, manufacturing, should I say, supply status. Until then, it was not expected. But now it is inevitable, I think. So it's going to happen. It's happening in cars already, in mobile phones. It's going to happen in two-wheelers. So you're going to see it across. I had just little doubt about it. The manufacturing boom is coming.
Wrap it up with one final question, Mr. Bansali. We've been asking all our experts that in next 4 to 5 years, what do you think there is a probability and a possibility of Sensex touching 1 lakh? Yes, sir, 1 lakh. That's the finger. 1 lakh is what the mark we're looking at.
I really am not oriented to think in that simplistic manner, Nikunj. But I have said that I think if you see logic, just as housing construction happens, then we see other goods follow. So now when infrastructure and policy making follow, the banks have already come out of the, their difficult times. You're going to see manufacturing come out of difficult time. You're going to see liquidity-starved industries like IT and others, etc., come out. And that winners will always come from, bottom up fishing. And so I will not give an answer more than the rounded one I gave.
Mr. Bhansali, such a pleasure having you on the show today. Thank you so much for taking time out for us.
It's a pleasure.
Thank you.
All the very.
Thank you so much. Okay, let's move on and let's just revisit what the market is at. We're what, Kunal, 34 points, 35 points away now from their all-time peak. The futures are already at 18,935.
The futures high actually was 989. And spot high was 18,888. So we are 38 points technically.
But it would be a fresh closing high if we close here, right?
Yes, closing wise, yes. We are almost at that closing high.
So what's the trade now, Naresh? Is it still a buy or now perhaps since we are, inching closer to all-time highs, perhaps time to take profits off the table?
So I think it would be a buy on Bank Nifty more because that is an index which is still a little bit away. So there is a lot of catch-up to be done on Bank Nifty. So banks could take that move. We still have ICICI Bank, HDFC Bank to make a move. Say another spike up of 1% on HDFC Bank and we make a breakout. So Bank Nifty would be the place to go along.
Okay, on that note, we are going to take a very quick break. Come right back. We'll have Shankar Sharma join in. Back with closing trades right here on 80 now, and once again counting down to that all-time high. Hopefully it should make it today, maybe not, maybe next week. 53 points away, by the way, from that all-time high on the Nifty, and not quite too far away even from that all-time peak on the Sensex as well. And who better than Shankar Sharma to celebrate this as well as 80 now's 14th birthday with us. Shankar, hi, and given by your latest diet regime and exercise regime, I must say you're looking younger than previous year.
Yes, and happy birthday to ET now. I didn't realize it was 14 years.
Yeah.
You look very young for your age too. So, heartiest congratulations. And I look forward to another, by my age projection, I'll be around for the next 60 years. So yeah, so I will wish you on your 74th birthday also.
I don't know if all of us will be here by then or not, but yes, definitely. But, I'm in half a mind actually to talk about health and fitness with you and not markets, but I'm compelled to do so considering we're 35 points away from that all-time peak, Shankar. So what stage of the party are we at? Are we peaking in or are we at the fag end of the party?
No. The party is going to be long, hard, strong. You need to be, up, pretty much all night, several nights. This is one hell of a party, so be strapped in, be prepared. I mean, this is just the beginning.
Going to lead this rally, Shankar, from here on because you've been quite positive about some of the new age tech companies. Talk to us about that, the other top bets that you are looking at this point of time.
Sorry, I lost your voice in the beginning. There is some problem with your audio. Can you just repeat your question?
Yeah, sure. No worries. I was saying that what do you think can drive the growth going forward? Which are the sectors you think will lead that? Because you've been quite positive about the new age tech companies, Paytm, Zomato, EaseMyTrip, etc. Are those the multi-bagger ideas you're hunting?
No, I've not been very positive on the new listings. EaseMyTrip is a different kind of company. It is actually probably the best one of the new age companies, at least, in terms of it's profitable, it's bootstrapped, it's not been burning cash like the other startups. So that's one of the preferred ones in the overall ecosystem of new age listings. The newer ones are obviously they will take a while to become profitable. Off and on. They will have their moments of spurting up. Like Nykaa has gone from I think the 120s to I think 140 or something, but there is plenty of other choice in this market rather than worry about the listings that happened in 2021 towards the end. So, there is so many things to like in India. There's so many things to like about the market that we can have hours and hours of discussion on that. But be that as it may, my simple point is I think we are at a fantastic point because we are just kind of reaching all-time highs. And that's usually, technically speaking, a good time to get invested. Because then the markets are showing good momentum. Globally, markets are very supportive too. The Nasdaq looks very, very strong. I mean, I tweeted about it in I think late March or beginning April that I felt that spring was around the corner. Spring being defined as not the weather, but the market spring. And the markets have been very, very strong, all of this spring and into summer. I don't see any let-up at all.
But Shankar, if you had to make one choice of, let's say, a broader sector that you're quite positive on, is it, let's say, manufacturing as a theme? Is it the fact that Indian demographics are quite positive, so consumerism is something, and the luxury space, which is seeing a bit of spike? Where do you see the maximum amount of traction? I know you're spoiled for choice, but still, if you had to make a bet.
So, I mean, I'm not sectoral in my personal investing. So in fund investing, you have to be sectorally conscious. You have to make allocations. That's also a risk management cap. But in personal investing, I'm totally agnostic. I buy bottom-up companies that look interesting. They could belong to any sector, and I really don't care. But there are sectors like that in logistics, some very interesting companies which have business models which are very differentiated, which are looking good in terms of their cash flows, return ratios, all the other things. I also own company in the services space. Again, I don't want to say that I mean, obviously, if I own something, I like it. Okay, so that's obviously the case. But there are companies which are into visa processing, which in my view, after COVID, the whole world tours and touring, traveling, etc., is in an upward momentum. We see data from across the world in terms of travel bookings. So all that benefits a particular company listed in India. So I mean, I'm extremely optimistic on the services space, on the manufacturing space as well. Some very interesting plays out there. So I don't want to get into names because then obviously that becomes controversial. But I mean, we are cutting across sectors here. The bullishness is across sectors.
Shankar, I recall, I don't know, about a year and a half back when you said Zomato, chai tomato, I'm not interested in that. And that statement of yours went viral. But now that these guys are talking profitability and somewhat, in sketchy ways, showing that as well, are you still interested in Zomato, or is it still as, one can ignore that?
So my good friend Samir is very bullish on it, that much I know. But again, remember, each investor, has his own philosophy, and Samir has very good reasons for liking Zomato. For me, when you invest personal money, I have to be extra picky about what I buy. Because ultimately it's my capital. And therein, I don't find Zomato fitting the bill. I mean, I have far, far better choices outside of the new age listings with good valuation comfort as well. I mean, there are companies which are still mid-teen multiples for 30-35% growth, 30-35% ROEs. And, that's really where my personal capital is headed. I'm looking at several transactions as well in the unlisted space, which will become listed. All of it, I just met a company this morning, probably 7-8 times earnings is what they'll go to IPO at a year from now. I mean, sorry, towards the end of the year. So I don't have to go and buy a Zomato or a Paytm, even if they are turning around or going to become profitable.
And Shankar, you've always been a strong believer that, the index may be doing whatever, but there is a large underlying broader market where there is bigger alpha to be generated. Tell me about some of the interesting themes that you're working on.
So, I mean, like I said, Aisha, there is no theme. I mean, themes come to me. I have to pick 5 themes or maybe 8 themes a year. Not even themes. I mean, 5 or 8 stocks a year, and that's enough to make a decent living. So, I've and of course, I mean, there will be stocks that kind of give you a bit of trouble. In a larger portfolio, there will be a problematic area, but overall, what I believe in, Aisha, is that in India, you don't have to necessarily take a huge amount of risk to make a lot of money because, like I said, across the board, growth numbers are very, very strong for companies. I mean, I bought an IPO of a company which listed, I think, just about 8 months back called Annapurna Swadhisht. And it's a small company, snack food company serving the eastern part of India. I think the listing was at some 50 rupees, 60 rupees, something like that. I forget what it was. Today, it's nearly 260 rupees in less than 8 months' time. And based on what numbers they are expected to deliver, they might deliver in 1 quarter what they did in the entire year last year. I mean, those are the kinds of numbers that are confronting us as investors. So I don't have to buy a Zomato or a Paytm. I mean, for me, smaller companies spread across India servicing their key individual neck of woods is really the trade. So there are so many companies servicing just one part of India, which I find Like one gem and jewelry company came and met me. They're probably going to do an IPO. Again, servicing one part of India, by servicing one little part of India, they're making 130 crores of profits. I mean, who could have ever said that? So like when I entered the business 35 years back, India GDP perhaps for $200 billion. Today we are adding $250 billion a year in GDP growth itself. I mean, that's a scale that we have come, and that's a scale that confronts us again as investors. I do not believe in the Twitter theory that all the good money and the easy money has been made by all of you old fogies, who all you're in your 50s and entering your 60s. I think even a guy of 25 or 30, guy or girl of 25, 30 today will be substantially richer 30 years from now. As rich as perhaps, or richer than perhaps we got at a similar age. I mean, the opportunities are humongous in India.
But Shankar, I'm curious to understand, how do you come up with these companies or the small cap companies? How do you go about searching them? Because as you also point out, there are a huge amount of opportunities, a lot of stocks to look at. How do you narrow it down for yourself?
So there are many tools, and I've said this on your shows as well as shows many times. Today, the world has become very flat in terms of stock picking. Today, the access to information for a large or a small investor has largely flattened out. Back in the day, there was privileged access. Certain fund managers, certain brokers could get, a lot more information than what a small guy could. But today, because of, better regulation, SEBI has been fantastic on that front by making the playing field very level for small investors. You get conference call, you get all presentations uploaded. You get fantastic screener tools available. You can do a lot of the heavy lifting yourself. And then, as I say, if a small investor is not full-time investor, is holding a job, he or she is holding a job, the best is to really follow a marathon approach, a marathon run approach, which means start with 50 stocks. And over 2 or 3 quarters, you will find that maybe 10 or 15 of them are working fantastically well, while the middle is about average, and then you have bad ones towards the end, which are the laggards. Eliminate them and rotate the capital back into your winners. I mean, on a simplified basis, if you were to do just that, I think most investors will handily beat most fund managers, for sure. So to answer your question, you can do a lot of this today on your own without having to go to a fund manager.
Okay, a lot of it can be done on your own without the fund manager as well. But at any point of time, Shankar, what's the mix of your portfolio in the sense of large cap versus small cap? Is it completely in small caps? And for a fresh investor, the 25, 30-year-old guy that you talked about, would you suggest to just deep dive and go right into those small cap names, or maintain a balance?
My view is that if you're a young guy or girl entering this business, 25, 30 years of age, there's no point wasting time on large caps, really speaking. Large cap is when we have made our money and we want to make sure that we don't lose a lot of it in a downturn. That's the that will need to move to large caps as you become older and you want more stability in your portfolio than the other way around. When you're young, you want to take risk. You are in the game to go from a slum to a penthouse. That's the trade, right? That's the goal. That's your objective. And the only way you're going to do that is by buying a little riskier end of the market. But it doesn't mean blind risk. It doesn't mean a gamble. You're not going to a casino. There is a method to this madness. And the method is what I just described, that take a marathon run approach, buy 50 runners. And at the end of 2 or 3 quarters, you will have 5 or 10 fantastic winners. Back your money into them, most of your money into them, and eliminate the rest gradually from your portfolio. I can guarantee you, I mean, just last year, I remember I did an experimental portfolio on a similar basis into small caps in the period March to June, which was a pretty horrendous period for markets. Okay. And today, when I look at that portfolio, on the average, they are up to 50%. Some of them are up about eight times from that level. Some of them were eliminated. But the average is about 250%. I mean, this is in what, less than 15 months' time. So it's very easy for investors today to make money, far, far, far more than what we used to have when we were, that age.
Shankar, let's talk about health and the new Fit You. What's Shankar Sharma's day like now?
What do you mean now? It's always been the same.
I know, but now that some of us know the secret, now that the secret is out.
Yeah, so Aisha, I mean, what's your question? By the way, on your WhatsApp, I gave you things which I did not put in that document because that was
I
meant
know.
for just for the women folk.
Yes,
So
I did see that.
because I didn't want to put it in the document because people will ask you many questions, and I don't want to attract the wrong attention. But yeah, I mean, like I said, that for me and for all people of entering our kind of age brackets, it is the ability to enjoy the wealth that India has thankfully given us. We were very lucky in a way that we entered the markets when we were in our mid 20s and India just was beginning to open up, which was the 91, liberalization. So in a way, we were blessed, we were lucky. But not to say that people today entering the markets are not. But we were very, very lucky. Now we have entered our 50s. We are about to at the cusp of entering our 60s. And at this age, I definitely want to be fit enough to enjoy the wealth I have been lucky and to be blessed with. I mean, it's been a blessing to have been born in India. It's been a blessing to have been involved in the stock markets for 35 years. Now I want to enjoy that blessing, and the only way you can enjoy it is by really taking care of yourself, by investing in yourself. We have invested too long in other people's companies. This is my company. This is my manufacturing. This is my services. This is my first priority in terms of investing. So that's what I'm doing.
Couldn't agree with that. You have one place to live in, and that's your own body and mind. Shankar Sharma, always a pleasure having you on the show.
Thank you, Aisha. Thank you for having me, and all the very best for the next 60 years.
Thank you. We will see each other at some point. Okay, let's just quickly mark what the market is up to right now. Unfortunately, we couldn't quite make it to that all-time peak, but that's okay. We're practically, in any case, there. Kunal, next week, Monday.
Yeah, I think we should start off.
Either of you or Nikush better get the rest. Even though Shankar Sharma's diet plan says no sugar.
Okay, some sugar is fine.
Yeah. For an all-time high,
yeah, exactly.
Okay, today the magic is really in HDFC Life, though. That stock is, buzzing higher by 6.25%. There's SBI Life. So, these beaten down, ignored insurance spaces as well are bouncing up again. There's Bajaj Finance, DRL, UPL, HDFC, Britannia, HDFC Bank, all these, stocks are holding out well. And of course, the blue chips as well are pitching in. So Reliance is holding up 1.25% in the futures. Broader markets looking very strong. Ashok Leyland, Manappuram, RBL Bank, ICICI Pru Life. And Kunal, it's very disconnected, right? The set of winners nowadays. Increasingly, as we're approaching that all-time high, there's not one sector which is showing leadership.
Well, absolutely, yes, Aisha. I think that's a right way to put it, because earlier in many phases of the bull markets earlier, there were some sectors, some themes which used to play out quite consistently well. But this time around, it's a lot more staggered. But then I think within that staggered market framework, we still look out for the sectors which tend to rally and give you a very stealth kind of a recovery for itself. So, for example, today you've seen many of the PSU banking stocks recover after yesterday's sharp sell-off for Bank Nifty. Private sector banks have made a good comeback. You've seen Reliance, I think, fourth consecutive day of strong price action. So there are certain themes, certain sectors, a few strong large cap names which are showing signs of trends emerging. And I believe on the back of this, it could just be a matter of a day or two that we hit back a life high on the index.
Okay, let's see when that actually happens, but we're just waiting by for that event of the life high on the Nifty and the Sensex. But for now, at least holding on to 18,800. But let's get some of the BDSC trades also out of the way. Kunal, what's the buy today, sell tomorrow idea?
So a couple of buy calls. The first one is about Reliance Industries, maintaining that stance which we initiated 2 days back. Targets of 26.50, stop loss remains at 25.25, and BHEL is the other stock which I think is making a very strong comeback. So it's not yet confirmed a breakout on the daily charts, but I'm anticipating that the stock should perform exceptionally well going forward. So would suggest a buy with a positional target of 100, stop loss at 78.
Okay, in terms of the other counters which are buzzing, of course, at the index level, it's a bit of a fizzle out that we are seeing. But in terms of the broader markets, Vedant Fashions has picked up pace. So that stock is higher by 3%. Torrent Power is moving higher. Kalyan Jewelers, of course, from the get-go, opened with a double-digit gain, and it's piling onto those gains, 15% higher. The entire defense space, Mazagon Dock, Garden Reach, all of these stocks are in focus. And to add to that, Karur Vysya Bank, you have Imami, RITES, Nykaa, Minda Corp. The list is really, really long when it comes to 52-week highs and all-time high levels as well. But Kunal, specifically from all of these shipping companies, defense shipping names, Mazagon Cochin Shipyard, Garden Reach. What's the top bet?
Well, I think at this point of time, I would not initiate a buy over here, Nisha, because the risk reward is very, very steep and skewed for many of the stocks over here in this segment. For example, Garden Reach Shipyard, the stock is trading at I think 598 or 600 approximately, and the 200 DMA for the stock is at 450 levels, which means we are talking of a divergence of almost 35 to 40% for the stock, from those long-term averages, and I think that's a bit of a steep. For the stock, and so is the case with many of the other names, Mazagon Dock, Cochin Shipyard, where the divergence is almost 30% to 40% from the long-term averages. And this is at a point where the large cap stocks are making a comeback. So I think there could be a churn which should be at play for the markets, where many of these stocks which have risen up by 40-50% in a matter of the last 1 to 2 months, they could see a bit of a profit booking or at least a sideways action, and the rotation should shift back towards the large cap names. So for Garden Reach Shipyard, Cochin Shipyard, etc., I would wait out for a correction to initiate a buy.
But before I ask you for any other large cap idea, tell me about Kalyan Jewelers. Would you be a buyer at 135? It's run up 18% today, and of course there was a large deal.
Yeah, I think it's a breakout for Kalyan Jewelers because I think after today's very strong price and volume uptake, this is I think one of the best volumes the stock has seen even on a weekly basis, not just on a daily basis, but even on a weekly basis. So that itself tells you the kind of action the stock has broken out with. So I think that's a trade which I would look to carry forward for a BTST as well.
Okay, that's the take coming in on Kalyan Jewelers. Kunal, though, what's happening with these insurance plays? HDFC Life, SBI Life, both on a tear.
I think there was some news or event for insurance stocks, and I think that's one of the reasons why right from the start, these insurance stocks start to perform very well. And I think it was more of due for these insurance names in terms of the rally, because I think after the budget this year, there was a sharp correction for many of the insurance stocks. And I think these stocks have made a very good comeback in the last 1.5 odd month. So these stocks have not yet scaled past about their 2023 or I think 22 high. There is a margin of I think 10% to 15% on an average for these stocks. But I believe that this rally should take them higher, at least closer to their previous highs, if not break past about those levels. SBI Life and HDFC Life, these are the two names which I would be keenly tracking. I think both of these stocks in terms of the chart patterns are very positive and very aggressive, for themselves with respect to most of the other peers like ICICI Pru, etc.
Okay, so that's how we are ending the trading session. Just 3 minutes left to that. No, we did not see those all-time high levels today, but nonetheless 18,820, and my guess is that will be at least a record closing coming in for the Nifty. But we are wrapping the week as well, and if you look at the big movers, most of the sectors actually ended in the green for the week. The biggest gain actually came for the Nifty Realty Pack. So Godrej Properties was up a good 7% this week. Prestige Estate, Brigade, Oberoi Realty. We should pull up the weekly charts of all of these counters. That saw the maximum amount of traction. Even FMCG wasn't far behind. So Tata Consumers has had a stellar week. Emami, Nestle, Dabur, Britannia. These were the counters that were gaining traction. A lot of chatter around the stimulus coming in from China. As a result of that, metals also had a field day. In fact, the week itself was quite good. So APL, Apollo, Tata Steel, Jindal Steel, these were some of the names as well. And Pharma too continued to see a good amount of buying action. So Laurus Labs, Zydus Life, Granules, these were the counters that were the favorites from the pharma space. From the broader markets, the other names that did quite well in the week was, of course, Kalyan Jewelers. Bulk of the gains of coming in today itself. You also had Tanla Platforms, Polymed, Karur Vysya Bank, Mazagon Dock, Electra Green Tech. All of these counters were big movers, and also DMart for that matter. It was very, very soft in the week gone by, but this week, it gained around 13%, so making up for the lost ground in the week before that. PVR was a bit of a mixed case. It started off weak on the front foot. That entire clamour around Adipurush being the game changer for Q1 doesn't seem to have panned out, because if you look at the trading session today, I know it's not making it to my list of the weekend.
Big disappointment. I just checked it out.
And I know that's the disappointment which is showing in the stock price as well, because yesterday PVR was close to 1500. Look at it today. It's managed to kind of give up all of those gains and ending the week with a bit of a cut. So 3.5% cut coming in. But the good news is that the overall market breadth is quite positive. 1300 stocks advancing. A lot of sectors which are doing well. Titan, DMart. These are the names which were doing quite well. Of course, IT has its own problem, whether it's TCS with that termination of agreement of Wipro with that technical adjustment of the buyback, and KPIT Tech, which was seeing a bit of a selling pressure in the week gone by. But other than that, Aisha, not much to worry. Of course, it was a very eventful week with the Fed decision coming in, the Chinese rate cuts, etc. happening. But hopefully next week is going to be even better, and perhaps those all-time high levels coming in soon.
What are the cues for next week, though?
Well, not many cues actually which are lined up for the coming week. Yes, there are a couple of IPO actions, HMA, Agro IPO, which are watching out for, AGMs which are due. But other than that, not really. I mean, there are a whole host of analysts mean that we have to track. The UK CPI data will be out. We'll also watch out for the PMI data coming in from S&P, etc. Chinese, there is one more prime data rates change which Street is expecting. So globally a bit to see, but the biggest cue of course is going to be the Prime Minister's visit to the US and what happens there, because the defense space was quite active on account of that. So today as well, of course, we saw the Garden Reach and the Sun Aeronautics of the world doing well. Next week, are we going to hear about all of these announcements coming in when Prime Minister travels to United States? We'll watch out for that. But nonetheless, for now, the week is ending on a positive note. Nifty going home with a gain of 132 points for the day, above the 18,800 mark. But on that note, wrapping up this edition of Closing Trades, thank you so much for being with us and have a nice weekend.